It's great to have you both here. And Dave, you always crack me up. So you heard Jay Powell's remarks today and took that as, hey, negative rates actually could happen. What was it about his denials that has you thinking, and even going into the question today, has you thinking this could really be coming?
Well, look, there's been a lot of talk about it. You guys have had Ken Rogoff on a few times. He penned a piece about how rates should be at -3% in the front end. We've seen Coach Lakota with some blog pieces as well, arguing the same thing. This debate has been there for a while, and the actors are all the same. And this is exactly what you would have expected Powell to say. He said nothing different, meaning he said the party line, which is, we're not doing this. We didn't like it before. We don't really like it now. But what he did say, which I thought was very interesting, is he used the words "for now" in one of his responses. He said there are some people who are fans of it, but for now, the committee is not looking at this. And for now is a very interesting set of words coming from a Federal Reserve official. It's not something that signals it's off the table completely. And I think, Rick, if I'm not mistaken, it was Rick Santelli earlier today in a somewhat heated debate with Steve Leisman was arguing, yes, the door was not shut today. It was not clamped tight, I think is what he said. And I agree with him. And I think a lot of people expected it to be more clamped tight, and it wasn't. So this is a move away from kind of what I would have thought would have been an outright denial of, like, look, this is not happening ever. Right. Using the word "for now" was very tricky for me. Very interesting.
Yeah, absolutely. And Diane, the other thing here is that this is a Fed that we've heard them pivot before. Even when they've declared across the board, like back in the end of 2018, that they were going to continue to keep raising the Fed funds rate when they, in fact, turned around and cut rates. It seemed preposterous. The president was calling for it, everyone, and then it happened. So we're used to about faces already. Do you think negative rates is something that should be on the table, and what would that achieve?
I don't think it should be on the table, and I actually think Powell was pretty clear about how unanimous the current Federal Reserve is. Every one of the participants said this is not what they think is the best thing, particularly for this unique crisis, and I think that's really important. We saw Patrick Harker talk earlier last week about how negative rates can't reopen businesses that are already shuttered. This is not the right tool for this particular crisis, and the threshold to use negative rates is very, very high. The Fed went through a year-long process, of which I've been to many of the meetings of, and the Fed, and Ken Rogoff was at those meetings, and I heard his argument, and I also heard the counter to it, and the Fed really did evolve. In the fall of 2018, I was at the meeting where Chairman Powell said, hey, we'd consider negative rates. That's something we're looking at. And so it's evolved to the fact that they looked at it, they looked at the efficacy, they looked at the mixed effects it's had abroad and the unintended consequences, and said, this is certainly not on the top of our list. And particularly for this crisis, this Fed has been unanimous that this is not the best outcome for triggering and curing what ails us with the coronavirus. So I do think the Fed has evolved on this, and they've thought about it.
And it's interesting, Dave, because you said the Fed has evolved, but it can keep evolving, even joking about a Chair Rogoff or a Chair Coach Lakota who's been open to it in the future. I mean, we've seen this before when they're kind of jockeying for influence. We might hear more about negative rates, especially now that it has the president's support. What is is this just because the market wants it and it's learned that, hey, if it wants something bad enough, it can get it? Or do you really think this would serve the financial system and the economy?
Well, look, there's two debates here. What should they do and what will they do? And you know me, Kelly, I'm much more about what I think they're going to do than what they should do. My opinion on what they should do is, just like everybody else's, it's not the important thing. The important thing is thinking about how this committee will evolve. And I do think with the president pushing it so hard, there's an evolution. I mean, if he is the next president, and that's a big if, who will be the next chair? And thinking about that over the long run is an important thing for the equity markets and long-dated fixed income investors who may have to hedge a Fed that pivots if Powell is not there in a year and a half. And also who the next governors are. Marvin Goodfriend, the late, great Marvin Goodfriend, was a big advocate of deep negative interest rates. Yeah. He unfortunately ran into some problems with confirmation as well. But again, I think we have to think about how the makeup of the committee evolves over a long horizon, not just over the next month, 2 months, or 3 months. And I do think you had Alan Blinder on, the vice chair when I used to be back at the Fed. way back in the early 90s, another lifetime ago. And he actually said, I kind of like negative rates, which is sort of funny that he said, I don't think it's happened, but I kind of like it. The academics all kind of settle on liking this.
Okay.
And, not all of them, but a lot of them. And it's practitioners that tend to be very nervous about them because it eats into their spreads. It's
Diane,
a livelihood issue.
Absolutely. And I think those are legitimate concerns. Diane, I'll give you the last one. We've just got a couple seconds left, but I see your face blanching. And please elaborate on what you think is more likely here with the Fed.
You know, you never say never, but negative rates would be the absolute last thing they do right now. And even a year from now, the composition of the Fed isn't going to change that much a year from now. And that's what the market is sort of looking at 6 months from now. That's what the market's looking at. Over the longer haul, you know, if the Fed were to bow to the will of the president, as this Fed did not, I think they had the credibility to do what they did because they did not. And if they were to have a chair that would do that, I think you'd have a heck of a rebellion among the presidents. This is not a single-led Fed. It is a committee that goes for it. And the unanimous nature with which they rejected it really matters.
All right. You got it all in. And we appreciate you both. We hope to continue the great rate debate, so to speak. Diane Swonk and David Zervos, thank you both today.